Good evening. You're watching The Digital Age, and I'm James Goodale. Recently, Google, you know about Google, went public again. They've been public once, and they went public again. Why did they do that? No one's really quite clear. And you wonder after a while, when you look at the price of Google stock, is Google overhyped? That's the question for tonight, and here to discuss it with us is Henry Blodget, who is president of Cherry Hill Research, who was heavily into the last, well, I was going to say last bubble, which means this is a bubble. We got that heavily in the middle of the last bubble, and is now running Cherry Hill Research, which does research on the internet and consulting on the internet. And he's also a writer and publishes work in Fortune, New York Times, and is a regular contributor to Slate Magazine. Thanks for coming by.
Thank you for having me.
Henry,
again.
actually, we had you here before.
That's right at the peak of the last bubble.
And what did you say, the peak last bubble?
Well, I think I said that it probably was a bubble. I didn't have the foresight to come out and say definitely, and it's going to burst immediately, but relatively close.
Let's talk about Google, one of the great phenomenons of all time of the internet. What is Google doing? Now, the general public, of which I'm a member, looks at Google and uses Google. I think Google's wonderful. They went public, how long ago was it?
Last August.
Was
over a year.
Over a year ago. And then all of a sudden, recently they went public again. Now the first time, man, it was like out of non-business school. We're not going to do it like anybody else. We're going to do it with an auction. And they've got some funny motto, and they keep putting the prospectus, but
don't be evil.
Don't be evil
yes.
all over the place. I mean, clearly a college kid's dream, this whole thing.
Sanctimonious.
Sanctimonious.
Yes.
And what was the price that?
$85, which was actually quite a bit less than they were expecting.
Yeah,
there was a lot of negative sentiment about the IPO.
Yeah, and there was a big disappointment, and then recently, they went public at, what was the price?
Well, they just sold, or recently sold, $4 billion worth of stock at $295.
85 to 295, and a short. What's going on with Google? Have they disappointed us? Here they were, you know, the idols of the idle rich and those who are not. What's going on?
No, I think they learned their lesson about the sanctimony. They really actually offended Wall Street. They wanted to come in and do it completely differently, but what they found is that there's a lot of Wall Street that is worth actually having the respect of, and they basically came in and said, we're doing you a favor by letting you buy our stock, and that didn't go over very well. So I think this time they've come back with a more mature attitude, and they've done a huge offering. It's one of the biggest in the last 10 years at least.
Is it really?
Yes, and so it's $4 billion that they raised, and that will obviously give them an enormous war chest to go on. But I think obviously the focus has been on the stock price, which has been extraordinary, as you pointed out.
Yeah.
But really even more extraordinary is the performance of the company, which is really not to be believed. And it's hard to remember that this is a 7-year-old company.
Yeah, tell us a little bit about that, because you know, I think of it as sort of a bubble stock and nothing's going on there. It's a great search engine, but how can they really be doing that? They're really doing well?
Well, if you look at the cash flow, obviously the big difference between Google now and a lot of the companies back in 1999 and 2000 where there really wasn't the cash flow to support the valuation. If you look at Google, Google's 7 years old, it has approximately 4,000 employees, and it's already generating about half the free cash flow of Time Warner. So this is a company that's been in business for 100 years, 85,000 employees, and here's Google marching up very quickly and already halfway there in terms of cash flow.
For those for whom cash flow may be a turnoff, who may be watching this, can we just quantify that? How much cash are we talking about that Google's taking in a year?
They will generate about $2 billion this year. And Time Warner will generate about $4 billion. And obviously it's slightly different than earnings, but very close, and I think more what the stock market focuses on.
And that's just the cash. That's not the sales. In other words, if you
that's right.
Do you know how much
They'll probably do about $6 billion in revenue this year.
$6 billion.
So the other thing to note about that is the extraordinary profit margin that they have. This is a company that just in terms of an earnings basis, in terms of an operating cash performance, is really running at about 60% of revenue, which that's higher than Microsoft was at its peak, and Microsoft's about the most profitable company in history.
So for every dollar, they keep 60 cents.
Right, before tax and interest and all that.
I know, but Jesus, that's a lot, isn't it?
Yeah, huge.
It's absolutely amazing.
And that's excluding the stock. Obviously, there's a lot of controversy about the stock-based compensation.
Okay, so what they're doing is, hey, we got something no one else has got on the block. We're taking in 60 cents of every dollar you give us. And the stock surprised us. It must have surprised them, or they would have gone public. I would have thought maybe at a higher price. And it's gone up this tremendous price. Hey, we're going to stick it to the public and really reap the benefits of this sudden success. Is that what they're doing?
I don't think so. I think the company, again, is certainly taking advantage of the stock. Obviously, the initial reaction was, well, what are they going to do? What are they going to buy with this? And I think probably the way they look at it is intelligently saying, we have this wonderful valuation. Let's take advantage of it. We're going to raise more money. We didn't raise as much as we wanted to in the IPO, so let's raise it. The other thing they did was create a lot more liquidity with the shares, because one of the things that has made the stock more volatile is that there have been relatively few shares outstanding for the size of the company. So there are more. And I should also say that the 60 cents we were just talking about, that is using a net revenue figure as opposed to a gross revenue figure. And so it's still incredibly impressive. But
okay, so they're going to, from the recent offering, they took in, how much did you say?
$4 billion.
$4 billion. How much did they have to start with?
Well, they have 7 now.
So 7 altogether?
Right. Yes.
Okay, now Microsoft for years has been sitting on a big hunk of cash. How much cash is Microsoft?
$50 billion.
Oh, well, it's a lot more. But is it really $50 billion?
Close.
But you know, Microsoft has had a hell of a time spending that money.
That's right.
They can't figure out what to do. And Bill Gates, who's now part of the corporate elite, you know, he meets with Warren Buffett. You know, they have big meetings together, and I take it that Warren Buffett is saying, well, you know, if you can't spend it, give it to the stockholders. And what they're in the same business Google is. So, well, I mean, why does Google know that Microsoft doesn't?
Well, I think obviously there's a big difference between 50 and 7.
Yeah,
but
I know. But
also,
same idea.
I think what you're seeing is that Google and Microsoft are going to increasingly be head-to-head with one another, and both companies recognize that. And I think Google, again, just wants more flexibility. And some of the young internet companies that are coming up now, there was a company called Skype, which was recently bought by eBay, and they're paying $2.5 billion, of which a big chunk is cash. So obviously, it's nice to have a wallet full to be able to do that very quickly. You don't have to raise stock. If your stock gets hammered, you don't have to worry about that. So I think it's mainly flexibility. And yes, you're right about the dividend.
Let me just stop there. I want to come back to that. But, I mean, you said an interesting thing that most people probably don't appreciate. I mean, here we got Microsoft. Everyone knows what Microsoft is. I mean, it's the top of the top. And then we got this upstart Google. And you say they're going to go head-to-head about what? I mean, Microsoft makes software for computers, but Google doesn't make software. Well, no, it does make software. No, it doesn't really make. You can't buy Google software.
No, you can't.
Okay.
You can on a very small scale.
Yeah, but so you can't buy it. So I don't know. It doesn't make any sense to me.
Well, Microsoft, I think, has correctly identified the internet and the advertising business and all the consumer businesses that spin off of that as one big potential growth area for them. In fact, it's critical because the company really has hit a size where for them to grow profits significantly off of their extraordinarily huge base is difficult. So they do need an engine. And you look at what Yahoo and eBay and Google have done, obviously Microsoft is very focused on that. So,
okay, so
they have a big internet division that is focused solely on that. And there's already huge animosity between Google and Microsoft.
Why?
There's recently a lawsuit about Google hiring away a Microsoft.
Why would there be animosity? That's just Gates trying to step on anything that's around.
I think it's Steve Ballmer is the one that's been quoted out there saying, definitely. But yes, and Google was sort of Silicon Valley's response to Microsoft. Obviously, there has been a lot of frustration in Silicon Valley with Microsoft over the years. But, now people are looking at this.
Okay, now let's come back
as a way to cut it
so
off.
they're both looking at the internet as a primary focus, and so that's the same. But I can't see that. But what do I know? That Microsoft is, as I said earlier, is doing anything that's effective with its money on the internet. So what is Google going to do? What's Google going to do with that money? That's the big question. No one knows the answer, but I want you to tell me the answer.
I will absolutely tell you. To go back to Microsoft, I actually agree with you. They have spent over the last 10 years a huge amount of money and time and effort to build up their internet business, and it's good. It's one of the big 3 or 4 businesses out there. Recently, there were reports that they were in talks to buy a piece of AOL, which would be very interesting. That would give them an even bigger mass. But you're right that they are effectively running fourth, even given their huge desktop prowess and their money, and it's very important for them to step that up. On Google's side, Google's really come out of nowhere. They stumbled into this wonderful search product that now everybody is sort of praising as the real net advertising that people missed out on in the 1990s, and it has grown, as we've talked about, just extraordinarily quickly.
Yeah, just to remind everybody who, all of us search Google, but we forget that while it's free, they're making all this money from advertising, and that's because they have sophisticated ways of telling the advertiser that we're using their system. Isn't that right, Marla?
That's right. If you go back to the 1990s and watch how internet advertising evolved, initially people sort of assumed it would be either like print, there would be big ads that you'd look at, or like television, where we'd be watching little TV ads. And it took 5 to 7 years to really figure out that the core competency of internet advertising is search and interactivity. So what Google does is charge anytime a user clicks on a link that an advertiser has bought. You don't have to pay to actually have it seen there.
But if the user click on many links?
I don't click on the paid links, which is interesting.
I don't click on links.
But some people do.
Who's clicking on the links? But anyway, they're a publishing company, right?
That's right, effectively.
You know, and I mean that has a lot to say about mainstream media, because all those ads theoretically are ads that could run in mainstream media, although some of them are pretty small. Entrepreneurs who are advertising. That's the great thing about Google,
absolutely. Right? It goes very deep into the economy.
Those guys couldn't pay mainstream media rates.
And it wouldn't make sense.
But I mean, this is a new form of publishing. Now, okay, so you're a publisher, and you're good at publishing, and you're good at ads, okay? Why in God's name do you think you're good at anything else? In other words, what are the natural things for Google to do with this expertise?
Well, I mean, you've hit on the big weakness to Google, which is right now it is a one revenue stream company. And you say that and Google fanatics freak out and say, that's ridiculous. Look at Google Earth, look at Google Answers, look at all of these other little products that they've developed that are really cool and everyone wants to use, but right now they're not generating any revenue that will do anything to the fact that they have this huge revenue stream in search. So their core competencies in search, they've gotten to the point where they're now a verb. Everyone Googles things and so forth, which is a huge benefit for them. But their challenge is going to be to now diversify the revenue stream. And this is something that killed Yahoo 5 years ago. They were really synonymous with not only search, but internet advertising and growing incredibly well. But then when internet advertising had that hiccup, Yahoo got steamrolled temporarily. So same thing could happen here.
But you are bullish on Google.
Long term, and I should again separate my incredible awe of the company from the stock price, which I actually think is relatively justifiable in terms of valuation. But I don't want to be. We're talking about the company right now, not the stock. But I
want to talk about the stock in a minute.
But I'm certainly bullish about their opportunity. But I do think that their real challenge is diversify not the products, which they're working on very quickly, but the revenue stream. They have to develop other revenue streams.
But do you have any confidence that they can do that?
I don't think it's clear that they will be able to diversify quickly enough to really buffer the main revenue stream because it's so huge. If it weren't so successful, then a lot of these little businesses that they have would start to really matter. But because it's such a big stream, it's going to be difficult, I think. And as long as search continues to grow, and a lot of analysts are really bullish about search long term, they'll be fine. I think it's very likely that in the next quarter or two or a couple of years, you're going to see a big hiccup in the search business because the growth thus far has been phenomenal.
Well, I was going to ask you about hiccups. We had a big hiccup in the internet business. When was the internet bubble burst? What year was that? 2001?
2000. 2001.
All right. So now here we are, 2005. We're talking about hiccups. Deja vu. What did Yogi Berra say? You know.
Absolutely.
Are we in the middle of another big bubble here, Henry Blodget?
I don't think so. I think if you step back from it, the internet has actually developed along very much a similar pattern that most big technologies have developed, which is you have this initial spark of opportunity where thousands of entrepreneurs and investors say this is a great opportunity, I got to be involved. You have thousands of companies that are formed. Eventually, in the beginning, that exceeds the opportunity out there, and a lot of the companies just the ideas are wrong. They're trying to put a round peg in a square hole or what have you, and so they fail. So you have a very big shakeout, which is what we saw in 2000 and 2001. But then, as long as the underlying opportunity is real, as it was for cars and personal computers and planes and all these different technologies, then you have a few survivors that are in a very good position to do well over the long haul. Okay. And that's where we are. I think we're in the early years of that.
Let's go back to when Henry Blodget burst on the scene with Amazon.com.
Yes.
All right. That was a great moment in any stock analyst's life, and certainly must have been in yours.
It was a bizarre moment, I'll say.
Well, okay, we'll let you characterize it, but here's the way I look at it. I've forgotten the numbers. You can fill me in. I mean, there's this guy named Henry Blodget, who's over at Prudential Securities.
Oppenheimer in those days.
Oppenheimer. Oh, it was Oppenheimer. Yep. It was Oppenheimer. Is it Prudential now?
No, they're CIBC World Markets.
All right, I had it wrong from the beginning. Okay, Oppenheimer. You're at Oppenheimer. And how old were you?
33, I think, 33. At that point.
But you made this prediction about Amazon, and the prediction came true. And what was refresh my recollection what the price of stock was. Tell us that story.
Well, Amazon, just to provide some background to that, Amazon had gone public, I think, in either 1997 or 1998. Right. There was tremendous controversy around it because this was a bookstore, and suddenly it was valued like a technology company, and they were growing incredibly quickly, and there was initially a lot of animosity from investors saying this is a short, it's going to go out of business, the model doesn't work. So a lot of controversy. The stock had gone from something like $30 or $40 all the way to $240 in a year. I'd been covering it. I had said in my initial piece, you know, if things go well, this stock could be a $500 stock.
$500 stock, that was...
Now, I didn't have the guts to come out and say that's my price target right away, but so the stock ran up quite a bit. It was at about 240, and then that's when we put the $400 price target on it that everybody, it was really
so then you did put a target at 400.
I did.
And it went to 400.
It did, and I was expecting that that might happen over the course of a year, and it actually happened in 2 weeks.
That was a really interesting moment. So how high did it get?
I think it peaked at an equivalent of about 600.
And what's it today?
In that split, obviously the stock split many times, but it's about 250 in that split.
All right, so now, now we have Google. Google goes to market and says, "Give me billions of dollars. I don't know what I'm going to do with it." And in the old days on Wall Street, when you went to the public and you said, "Give me your money, I'm not going to tell you what you're going to do with it," people thumb their nose and say, "Hey, come on. Tell us what you're going to do, or at least do it, and then we'll pay you," which is what private equity firms. But I mean, why isn't Google sort of putting itself in the same track as Amazon? In other words, the stock is taken off. There are reasons for it, but isn't it getting too high? And won't its bubble burst, Henry Blodget?
Well, Google is certainly in the phase where the company can do no wrong. And as we've all seen many, many times, when a company can do no wrong, investors stop insisting on answers to hard questions, and they sort of say, we have our faith, here's the money, do what you want. Then most companies stumble. Suddenly everyone gets tough with their questions again, and it's a much tougher ride. So, but Google's in the part where they can do no wrong. Lots of people want the stock. On a pure valuation basis, going back to the cash flow that I was talking about earlier, the stock is actually not that expensive. It's trading at about 40 times 2005 free cash flow, which is not cheap by any means, but it's also not ridiculous. Now, as we've talked about,
I'm trading at 1 times cash flow. A lot of other people are too. 40 seems like 40.
Well,
40 seems like a lot.
Or maybe you are. All right. So anyway, but obviously if something happens to search, their cash flow will get hit, the stock will get crushed. So this is still a very risky stock.
We got a price target here for Henry Blodget?
We do not.
We don't have a price target for Henry Blodget.
I'm not in that business anymore, thank goodness. Yeah.
we don't have a price target. But, well, can I ask you, do you think it's going to go higher?
I think it certainly could.
From its recent offering price? I will say people are going to look at this afterwards, so we'll know whether you're right or not. It's an unfair question. You don't have to answer. But what do you think? Think it'll go higher?
I think it will continue to go higher until their sequential growth starts to slow, which I actually think will happen in the next quarter or two. So
Okay.
I don't think there's too much more. But
Okay.
now
Well,
that said, again,
all right, now we have
the long-term opportunity.
So we had an internet bubble. We don't have an internet bubble, but we do have the internet. And one of the things we want to ask you today is, can we put the internet in perspective? And one of the great analysts on Wall Street, Barton Biggs, was asked that question on this show. And here's what Barton Biggs had to say about that. And I want you to tell us what you think about Barton Biggs. Not it personally, but what he said. So let's take a look and see what he said.
And the difference between air conditioning and the internet is that the internet, it sort of lives like in dog years. You know how dog years are 8 times as fast as human years? The same way with air conditioning. The same way with air conditioning and the internet. The effect of the internet is occurring much faster than the effect of previous investments, but of previous great changes. But to think that it's different, I don't think that's the case. And I stick with what I said. I mean, air conditioning changed the world. The radio changed the world. All kinds of electricity, the telephone changed the world. I think that the internet is going to have a bigger effect on the way people live than the invention of the telephone did or the invention of electricity? I don't think so.
Thank you very much for the tutorial. Well, what do you think? Is he right?
I think he is 99% right, and we should also say yes.
He's 99% right.
99%, and we should also say that that was recorded in 1999. He was very prescient. He was one of the few voices in those days who was trying to keep everything in perspective and so forth.
Well, let me just get
let me say what I think.
Make sure we got the proposition here. Air conditioning had a bigger impact on American life than the internet.
No, I think what I heard at the end, what I think he was saying was that we have seen big technologies come in and change the world before. Right. So don't think that this is something fundamentally new, which is absolutely the case. I do think the internet is going to eventually end up having a bigger impact on the world than the telephone or the radio.
Oh, you do?
Perhaps not than electricity, which is actually something fairly similar. You're distributing power everywhere that just launches millions of applications and appliances and all that stuff. But in this case, you're doing the same thing. It's just information that is available everywhere. And if you look at already what's happened to so many different industries as a result of the internet. What's happened in the music industry, which has really been whacked across the knees, and the media industry, where the online is now really sucking dollars away from almost all traditional media, and a lot of the media companies are frantically seeing that and trying to figure out what to do with it. Time Warner made a horrendous mistake in their choice as to how to do it with AOL, but they do have to do something. And in future years, I think you're going to see a similar impact in telecommunications, where you have a circuit switch telephone companies that have been around for 100 years are suddenly really going to come under assault with voice over internet protocol and so forth. So I do think that the internet will certainly have a bigger impact ultimately than the radio or the telephone.
And air conditioning?
Then air conditioning, yes, in terms of its impact on many other industries.
The argument for air conditioning, just to speak on behalf of Barton Biggs, is that we're so used to it we don't think about it. But the South was not an economic power at all because it was so hard to work there, and it took your energy away. And so the air conditioning made a whole new economic entity. But you think that the internet is greater than anything that we know except electricity?
I think the electricity of all those analogies is probably the closest in terms of it's hitting so many different industries worldwide and in such a rapid time. And I do think we're at the beginning of how it is going to change these industries. Definitely. Well, we're only 10 years in at this point. And if you look at where television is, if you take the analogy back, that's television in 1950 or so, and it's changed considerably since then.
So how long do you figure, if we look at the previous revolutions, they're X years, I mean, how long do you think the internet revolution is going to go on for?
Well, the initial rollout, certainly in the U.S., happened relatively quickly because we were selling into an installed base of computers. The next rollout is broadband, and then globally, and what's happening in China and so forth.
Right.
There huge changes will result from that. You'll have a lot of countries that have missed the last 50 or 100 years of development will leapfrog in. I mean, Korea has done incredible things with broadband, and that's had an incredible impact on e-commerce, which is much higher than the U.S. as a result of that. So in some cases, I think you are seeing the future of the internet when you look at Korea and countries that have gone directly
Do you think
to
we're looking at
broadband.
a generation?
Definitely, and I think the impact.
So a generation's 30 years. So you think that we're year 10 of, say, 30 years of change?
Or more. I mean, I think if you go back, if you look at the newspaper industry, for example, which is also under assault, and I think ultimately will be forced to radically change itself by the internet. You and I grew up reading newspapers. It's a habit, so forth. The college students today never read newspapers. So
well, Henry, we want to have you back again, but we've reached the end this time.
Well, thank you for having me.
But you know, we're going to ask this question. One, did you buy any Google at this last offering?
Not on the last offering. I bought on the IPO and made the mistake of flipping it immediately.
So, do you think, therefore, that Google is overhyped? Yes or no?
No, I do not. However, that is not a prediction about the stock price. Thank you very much.
Hey, thank you very much for coming by, Henry. And thank you very much for coming by to listen to Henry Blodget and hear all about the digital age. Come back next week and learn more about the digital age. For the digital age, I am